And many thanks indeed for staying with us here on the news at 1. It's time to talk business as the Monetary Policy Committee of the Central Bank of Nigeria commences its first meeting for the year 2023. Financial experts have expressed diverse views on possible outcomes of the deliberations. The experts and researchers at Cordros Securities are expecting a rate hike after the meeting, expecting the MPC to opt for smaller rate hikes in the short term. However, a professor of capital markets and chairman, Chartered Institute of Bankers of Nigeria, Professor Uche Nwaleke, says the MPC would likely keep all the monetary policy parameters when the members meet this week. He says MPC rarely adjusts its policy rates in January due to the need to allow the market stabilize the new year, and inflationary pressures is beginning to reduce, as seen in headline inflation numbers for the month of December 2022. Let's stay with the Apex Bank, as the central bank says as part of its plans to phase out the old Naira note, it will commence currency swap in the rural areas today. The CBN disclosed this in a circular to all money deposit banks, mobile money operators, and super agents and agents. The circular was signed by the Director of Banking Supervision Department, Mr. Haruna Mustafa, and Director of Payment System Management Department, Mr. Musa Jimo. That's why the Apex Bank and Deposit Bank's assurances that Nigerians would begin to receive the new Naira notes from ATMs across different platforms. Findings by TVC News show that many ATMs belonging to financial institutions are still dispensing the old Naira notes. Well, the central bank has insisted that the January 31st deadline for the phasing out of the old Naira notes will not be extended. The Lorry branch controller of the Apex Bank, Mr. Najimo Lamidi, reaffirmed this while speaking with newsmen during a sensitization visit at the Palace of the Emir of Ilorin. Dr. Ibrahim Zulu Gambari was the first port of call for the CBN officials. The Emir commended them for embarking on such a campaign. The team also visited some major markets in Ilorin where they were intimated markets, men and women, on the advantages of the newly redesigned 200, 500, and 1,000 Naira notes.
Many people around here, Kwara State, to know about this new currency, to make sure that they accept it, they use it, and to make sure that those that have this old currency at home, that is 200 Naira, 500 Naira, and 1,000, they take it to their bank on time, because CBN will not extend the deadline of 31st of January. So by that time, we expect everybody to take their money, the money they have at home, to take it to their various banks for deposit.
And now to other stories. The number of mobile subscriptions in Nigeria rose to 222.23 million in 2022, despite the implementation of the federal government's national identification number subscriber identity model policy. At the start of the policy in April, over 72.77 million active telecommunication subscriptions were barred from making calls in the country. But the industry has since shaken off the effect of these and grew by 13.89% in 2022. According to new data from the Nigerian Communications Commission, NCC, the total number of subscriptions grew from 195.13 million as of December 2021. This growth signified a complete shake-off of the decline that plagued the telecoms industry in 2021, when the total number of mobile subscriptions declined by 4.42% from 204.15 million as of December 2020 to 195.13 million as of December 2021. Let's shift attention outside Nigeria and South Africa, where the country's rand weakened early today as power utility Eskom extended scheduled electricity cuts, which are a major brake on economic growth and a source of investor concerns. The rand traded at 17,117.1500 against the dollar, 0.16% weaker than its previous close. Although Eskom has promised to implement power cuts on Tuesday, some economists in that country are predicting that the South African Reserve Bank would raise rates by 50 basis points to 7.50% at its upcoming meeting on January 26, while others say no further rate hikes, forecasting the end of the tightening circle that began in November 2021. The government's benchmark 2030 bond was almost unchanged in early deals, with the yield at 9.780%. Away from the continent, let's turn to global markets now, as Asian stock markets are trading mostly higher in weekend holiday trading today, following the broadly positive clues from global markets on Friday, with most markets closed for the Lunar New Year holidays. As some traders look to pick up stocks at relatively reduced levels following recent weakness. Australian stocks closed modestly higher on Friday, while the currency market, the Australian dollar, is trading at $0.698 today. Nasdaq spiked to 2.7%, while the S&P 500 surged at 1.9% and Dow jumped at 1.0%. German DAX index advanced at 0.8%, and the French CAC 40 index rose at 0.6%, and the UK's FTSE futures added at 0.3%. The currency market, the US dollar is trading in the lower 129 yen range today. Away from global markets, the euro scaled a 9-month high on the dollar today as European interest rates are contrasted with market pricing for a less aggressive Federal Reserve. The euro reached as far as $1.09, breaking the recent peak of $1.088. European Central Bank Governing Council member Mr. Klasnod says interest rates would rise by 50 basis points in both February and March and continue climbing in the months after. Also, analysts support a hike of 50 basis points in March, an eventual top of 3.25%. Investors also want 50 basis points of U.S. rate cuts priced in for the second half of the year, rejecting softer data on inflation, consumer spending, and housing. Let's wrap things off now with crude oil prices on the international market as it drifted lower in early trade today, weakened by the Lunar New Year holiday in East Asia, but held on to most of last week's gains on the prospects of an economic recovery in top oil importer China this year. U.S. West Texas Intermediate crude experiences a downward price review of 0.17% to sell at $81.50 per barrel. Brent crude futures also experienced a downward price margin of 0.29% to sell at $87.38 per barrel. Oil sells at $87.40 per barrel, with an uptick of 1.66% for the OPEC basket. Crude oil dealers are offering $82.60 per barrel, with a price decline of 2.39%.